Several years ago, the Asset Owners Disclosure Project realised that it was going to be difficult to get good transparency from asset owners. We looked at the example of CDP and how successful it had been by employing stakeholders, the shareholders of companies, to pressurise those companies for emissions data. Superannuation funds and pension funds all around the world, of course, report to only one stakeholder group, and that's their beneficiaries. We realised a long time ago that we had to engage beneficiaries if we were to create better transparency amongst pension funds around the world. To do this, we launched the first ever social media platform called The Vital Few, which was launched in late 2012 and piloted through 2013. The Vital Few took a sample of pension beneficiaries in 3 countries, Australia, Canada and the UK, and drove them to write to their funds about how their funds were managing climate risk across the 5 categories of how we rate funds generally, which is the transparency, risk management, incentive chain alignment, active ownership and low carbon investment. What we wanted beneficiaries to do is not to make some ethical or moral judgment on the management of climate risk, but to demand that their funds tell them in a material and financial sense how they were managing this long-term risk, and to provide their beneficiaries with some certainty that in the event of some carbon repricing period or some kind of carbon crisis, that their retirement savings wouldn't be threatened. We've seen since then that actually there's been a whole plethora of beneficiary campaigns started to spring up, and we thoroughly support all of these campaigns. What it shows is that the pressure on the asset owners, not just in Australia but around the world, is going to increase over time, and there can really be no escape for funds who want to lag behind the leading group.